we're going to see billions and billions and billions of selling from these companies if Bitcoin goes down too much. So there's like the market is now very fragile again. We're not standing on a house of cards. That's not what I'm saying. I think the market is a lot healthier today than it was in 2021. But if we let these guys get too big without bopping them on the head and saying, stop what you're fucking doing, we might end up on a house of cards situation again.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Welcome back to another 1000X podcast. We've went through a pretty exciting week, Jonah.
Yes, we did.
A little bit of what's funny is it was an exciting week, but Bitcoin price reasonably unchanged, even though we had a little bit of a dip. We had a bit of a scare. The entire market was talking about that Galaxy Bitcoin that was being sold and flipping out because of it. But it looks like kind of now it was a non-event. And Jonah, you worked on an OTC desk for a while. When you first saw the news come out, were you worried about it? Like, what was going through your head as a former OTC desk guy?
Yeah, I mean, I ran an OTC desk in crypto and in oil too. It's I guess I spent about half my career in the OTC world and half on the buy side. And I would say, generally speaking, I was not worried. I think that, was it 80,000 BTC?
So it was a lot of Bitcoin. I think that was the headline number was 8 to 9 billion.
Yeah. So
in Bitcoin. So
largest
notional. That's scary, right?
It's scary. It's the largest notional OTC trade ever, but it's really not that much in the context of the market. So I guess if you just want to zoom way out, tens of billions of dollars worth of BTC trade every day, if you include the liquidity in perps and calendar futures and other sorts of derivatives. Basically, like the BTC delta liquidity per day, is massive. And generally speaking, the rule of thumb is if you want to participate in the market without moving it, your participation rate should be about 10% maximum of the total daily traded volume in an instrument in order for you not to have a meaningful price impact. So let's say that $60 billion worth of Bitcoin trades every day, which is certainly true on some days. You can trade $6 billion in a day without really impacting the price against yourself. So that was sort of our rule of thumb when I was running trading at Cumberland, and we had all sorts of times where we would be way bigger than the market in blocks of GBTC or blocks of various spot, or it's particularly pertinent in altcoins because sometimes an Avi Feldman comes along and wants to buy or sell millions or tens of millions of dollars worth of an alt with thin liquidity, and then you have to basically put a price on it that's going to allow you, like the Avi Feldman just wants to get done, clear the risk, and move on with his day. But like the OTC desk, it becomes that desk's problem as soon as the trade is done. So then, like, how do you manage it? You basically build in a price that allows you to manage the risk over a perceived number of days. So let's say that this is Roger Ver selling Bitcoin. We don't know who the seller is, but it's possibly Roger Ver. That's the rumored seller. So wants to sell $9 billion worth of Bitcoin to Galaxy's OTC desk. Basically, Galaxy has to say, okay, let's say that I just take this down. How long is it going to take me to get out without really impacting the price? And also how much you look at realized volatility as well. How much has the price been moving? Well, the price hadn't been moving that much. The volumes, the daily volumes in Bitcoin were robust. And so realistically, it's like a day and a half of using that 10% participation rate to get $9 billion out the door, maybe 2 days of just slowly kind of like exiting risk for Galaxy to get out of that risk without moving the price too much. So it's basically like, all right, I've got to sit on $9 billion worth of Bitcoin over the course of 2 days as that slowly dwindles down. So maybe $4.5 billion on average. How much does Bitcoin move per day? Well, it moves like, 1 to 2% per day, maybe right now. So at risk, that's, $45 to $90 million worth of variance per day. Let me bake in $250 million worth of slippage to cover the $90 million worth of variance, maybe $180 million worth of variance over 2 days, and I'm probably safe. Like, it's not that much more complicated than that. When you're trading Bitcoin or anything, stocks, commodity futures with like really minute time frames in small size, like when you're trying to build a bot that trades in and out of something every with a time horizon of 5 to 10 minutes or 5 to 10 hours, like that's pretty mathematical. There's a lot of science and engineering that goes into building those systems. But for these huge block trades, they're so rare that no systematic process applies. It's usually just like that, the head trader will huddle with his or her team and huddle with the CEO of the company at this, at 2 different meetings, and just be like, this is roughly, like, go through the logic, the sort of back of the envelope logic that you could do on a bar napkin if you wanted to, that I basically just talked through. That's about it. Worst case, we lose $180 million in 2 days. Let's slap a $250 million charge on it. What do you think, boss? What do you think, team? And if it's ratified, then you just kind of go for it. And then you obviously deploy all of the best practices in terms of slippage management and leakage. And just, to finish the thought, in Bitcoin, you have the benefit of both, spot and a wide array of derivatives. So it's entirely, when I quoted that 60 billion number, which is, there's a wide band of volumes that'll go through in a given day for all Bitcoin related instruments. So 60 billion is just maybe middle of the range. That's not just spot, right? So if Galaxy gets hit on 9 billion worth of spot, they're going to be selling some spot, they're going to be selling some perps, they're going to be selling some CME futures, just whatever the best liquidity is that's out there, they're going to be taking it. And then they're going to end up with basis, right? They're going to end up with, okay, I'm long Roger Ver's spot, some of which I got out of, but some of which is just hedged with perps. And then I have to unwind that perp. So probably the whole mess takes a couple of weeks to unwind slowly.
Let me ask you a few like clear up questions just in terms. This is like common. I get these questions and sometimes I don't know the answers, but maybe you do. So you've seen that sometimes you'll get hit from a message on Telegram. Hey, I've got like 10,000 Bitcoin I need to sell at a minus 10% discount. Do you have any buyers? Is that ever real? Like, is that ever, does Galaxy go around and shop and say, hey, we just got this massive slug of Bitcoin, I can sell it to you at a discount? Like, does that happen ever?
No. Everybody thinks that happens. And the reason it doesn't is because any buyer who, like, I guess, yes, you would market it to somebody. You would do that in an illiquid thing, right? Like a CryptoPunk. Like if somebody just hit an OTC desk on like 16 punks, that desk would go and talk to potential CryptoPunk buyers about, hey, listen, I could offer it to you below where my sheets say it's worth. But for something as liquid as Bitcoin, people are watching it on screen all day. They're not just going to jump. If anything, they're going to be hesitant to buy a liquid instrument from you if you're like, oh, I'm like swimming in this stuff. Please, like, do you want some at a discount? Only the only time that happens is when it's like rendered illiquid somehow. Like during the FTX bankruptcy, Galaxy, which Galaxy also did, they were like, hey, do you want like 1 year locked Solana at a 50% discount? People would, they could go to buyers credibly with that. But like if I were a buyer, size buyer of Bitcoin, and Galaxy was in touch with me and they knew I was a size buyer, and Roger Ver had just hit them on $9 billion, and Galaxy told me, hey, Jonah, do you want to buy $1 billion worth of Bitcoin right now? I knew you wanted to buy $1 billion. Now's your chance. I would think, wow, these guys are like so long, they don't know what to do with it. I'm going to go and sell Bitcoin on the basis of that information. and then wait for these guys to start hedging their stupidly large position and then buy it all back and then some on screen. I don't need to talk to Galaxy for that. So basically, it's all very quiet. But the way they will do it, Avi, which is interesting, is they will telegraph that information silently to the market in a way that doesn't screw them. So they will basically lower if their market, like at Cumberland, we're making markets all the time on screen. I don't know if Galaxy does that. Actually, probably not, because they're not really a tech firm. But like we would lower our bid ask on everything, right? So we would sell ETH against being long Bitcoin. We would sell Solana against being long Bitcoin, because at that point you'll take any liquidity you can get, and Solana and ETH are correlated instruments, right? So you basically lower your offer on everything that's correlated with Bitcoin, including Bitcoin spot, futures, everything. You just lower it all. So you're kind of like you're the best offer on screen on a bunch of stuff. So you're selling a lot of coin, but you're not like dialing people and explicitly telegraphing which has happened to you.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
What about the people that claim that these OTC desks will take it and just short before and try to stuff the market to make money off of it? Like all these claims of market manipulation.
If you know that a client or customer or counterparty is about to sell $9 billion to you, or maybe you're in comp with one other dealer, like smart, if Roger Ver or whoever the seller is was smart, he would have called up like 2 shops or 3 shops and put them in comp with each other. If he's dumb, he would have called just Galaxy and been like, I'm only calling you because I like you. Give me a price. And then it's not a competitive process. Then Galaxy can get away with way more tomfoolery. But basically, even if you're in comp with 2 other OTC desks, if you know that $9 billion is about to hit the market with a high degree of certainty, you do what's called pre-hedging, which is a legal form of front running, right? It's basically like, I'm going to go and get short this thing to pre-hedge, hedge in advance this position that I'm probably going to have. And then if you don't get hit, if your competitor gets hit, you just cover the trade as your competitor starts to sell that coin into the market. So yeah, pre-hedge. If you don't pre-hedge, you're stupid. If you pre-hedge too much, you're doing something illegal. And so it's kind of a delicate balance.
When I used to trade with you guys on a desk, I would come and I would say, I want to go sell X amount of an asset, and you would give me a price right then and there. So like, I want to go sell $5 million Bitcoin. You would give me a price right then and there because you already had 5 million of Bitcoin on your balance sheet that you could go sell, and so you weren't waiting on me to go deliver that Bitcoin because you had that 5 million somewhere, and then I could send you the Bitcoin like within 4 hours of making that transaction, something like that. That's like your risk pricing. With something as big as this, do you think Galaxy was giving them a price up front? I think it was probably more likely that people were freaking out over the coins moving.
Yep.
But I feel it was more likely that they were working out of the coins slowly over time and passing along some sort of price plus a spread.
Yeah. So you bring up a really brilliant point and ask a great question there. So let me attempt to respond.
Maybe that wasn't asked as a question, but that was a question.
Yeah, no, it's the absolute right question and the source of a lot of misconception around how these giant trades go down in the market. So 2 things in there. First thing, did Galaxy just work Roger Ver's Bitcoin? on his behalf. Like maybe, but I would put the probability of that at very low. No OTC risk taking desk that I've ever heard of or ever worked on has been given a situation where it's like, here are my coins. You take no risk whatsoever. You take as long or as long as you want or as little time as you want. You decide, just work me out of these coins for me and take a spread risk free to do it. I've never heard of that happening because why would you hire an OTC desk to do that if you can just do that yourself, or hire an execution trader for $20 an hour to do it for you? Well, I'm exaggerating, maybe more than $20 an hour, but like, you don't need to hire an OTC desk to leave the risk on your balance sheet and work out of it over some unspecified period of time. That's the purpose of an OTC desk, is to take the risk off your hands, bang, all at once.
Just to be clear, because this is kind of a funny insert, there is actually a time where I used to do that not infrequently. But the reason I would do that not infrequently is because we could not access certain exchanges, and there would often be some esoteric asset on some exchange that we would want to buy that we just couldn't access, and we didn't liquid. So what we didn't want to do is we didn't want to go to them and say, hey, just like give me a price on this thing that trades $500,000 a day. We would say, we'll refund you. We're going to send you $1 million. You have access to this exchange. Run a TWAP plus 25 bips over the next 48 hours.
Mm-hmm.
That's like the only situation that I could ever think of that I would ever ask an OTC desk to do what you're saying.
Okay, that's interesting because I've never heard of that before. So that would be that's actually, like market structure wise, like a really interesting example. I doubt that's the case for Bitcoin, though. The second thing that you bring up, which is very pertinent here, is like at DRW, if we had been asked to bid on, and many times we were, especially during like the huge bankruptcies of the 2022 piece of the cycle, we were asked to bid on, billions or tens of billions of dollars worth of coin. Like a lot of times a prop shop, not saying DRW, but just in general, a prop shop won't have enough cash on hand. And Galaxy is at the end of the day a prop shop. Like there is a number of dollars that Mike Novogratz doesn't have to buy coin. And even if it's like settled in some way where the fiat that Galaxy would have to wire out to buy these 80,000 tokens is delayed a little bit. So, like you can raise the cash somehow or borrow it on some sort of revolving credit facility. You still have to have coin to go and sell or margin to put on exchanges against the perps that you're about to short in gargantuan size. So there are a lot of like financial logistics going on under the hood. I wouldn't be surprised if this was done in tranches, where Roger Ver moved all the coins to either an exchange, maybe it was an escrow account sanctioned by the exchange. You never really know with these transactions, but like I wouldn't be surprised if it went down in tranches, or alternatively, if the settlement procedure was such that it was like basically the fiat that Galaxy would have had to wire out was delayed over a number of days. Only the Galaxy trading desk knows for sure. But ultimately, I don't think this was worked on an agency basis, unless I'm mistaken. And I think it was probably done principal by Galaxy in tranches. That's my guess.
That would make sense, and it all kind of makes sense then, like why the market didn't feel like it was being suppressed for an extremely long period of time. It was like you had the news, and the news came and was over in like 2 days.
Yeah, like
it wasn't a long drawn out process. So I guess one takeaway is in the future, don't panic too much. That panic produced a great opportunity, like when Bitcoin sold off to 115 and everyone was like, oh my God, what's happening? It immediately got bought right back up. And basically, like according to what you were saying, it's very possible, one, it might have already happened, and two, it was going to happen very quickly. It wasn't going to be this long drawn out over 3 weeks. We're going to come and sell like 300 mil like a day kind of thing.
Yeah, one thing I've noticed is that people get way like market participants, especially, people on Twitter who haven't worked inside of financial firms before, they get way too panicked about one-off big trades and not nearly panicked enough about like waves of flow. So what I mean by that is like $9 billion. Yeah, it sounds like a lot, but in the context of Bitcoin and how big it is at this point, how big and liquid a deep market it is not a big deal at all. And Galaxy probably handled it really well. On the other hand, like I think the real fear that I had wasn't like, oh no, somebody's selling $9 billion worth of Bitcoin. My fear was like, what if this is the level? What if this is just the beginning? What if this is the level where like all the 2010, 2011 OGs just decide, all right, enough, we're all out, right? And there's just this like wall, this tsunami of selling. That would have freaked me out. But it seems like the opposite was the case. This 9 billion got slurped up by, Avi, you were saying it's a wall of treasury company buying. So now let me turn the questions around on you. Who are these buyers? What are these treasury companies? What are they doing? Are they scams? Are they not? I don't understand. It feels like there's a lot of nuance in the space that you understand a lot better than me. And we need to figure out who this wall of buyers is and when they're going to turn around and sell.
I mean, we've talked about this a little bit, but it's just gotten even crazier and crazier since then. I think I saw a number that there's been $90 billion raised for treasury companies in total, which is a fucking massive amount of money. Obviously, a lot of that is MicroStrategy. It is the vast majority of it. But with that being said, there are a lot of other companies that have sort of come out of nowhere to buy stuff up. I mean, and then you're now, like you're seeing, like let's look, just public companies that own Bitcoin. MicroStrategy has that 70 billion number, so it's about 20 billion from other places, but 20 billion is not a small amount of capital, Jonah. 20 billion is pretty big. Metaplanet is 1.7 billion on their balance sheet. Uh, it's like these people just keep buying. You have Sharpbet, which is going for like 5 billion of ETH and just like sucking stuff up. And the question is why? Like what is happening here? Like why are all these companies sucking up Bitcoin? There's already a Bitcoin ETF. Why would you ever buy one of these companies? And the answer is kind of interesting. So based on and I've been looking around for a while at this space to try to figure out like is there something redeemable here? And the answer is yes, and I want to come back to that in a second. But what's happening right now is that people on the public markets are paying $2 in equity value for every $1 in crypto that you own. That is what is happening. And the reason it's happening is because MicroStrategy proved that there's a massive market for this. There's a massive market for non-recourse leverage of on Bitcoin. It's you buy a company that in theory in the future can issue more debt and accumulate more Bitcoin, therefore increasing your overall share of Bitcoin own of your share of that company is entitled to more Bitcoin. So it's a vehicle that allows you to accumulate Bitcoin over time. That's the way that people are thinking about it. Now, there's another reason for this, which is that even the ETF, I'm talking to a lot of the companies that are getting filled, that are the investment banks that are actually filling these rounds. And what they're telling me is that a non-trivial amount of the capital that is coming into these treasury companies, it's coming from pod shops. It's coming from places like Millennium. It's coming from places like Citadel, where these pod managers are not allowed to buy managed products on the open market. They're not allowed to buy the ETF. So they want exposure to Bitcoin, but they don't want exposure to MicroStrategy because MicroStrategy is boring. They want to buy this new issuance that could pop 3x on the open. They get it. You get in at some sort of discount to NAV. Like let's say the NewCo raises $500 million to go buy ETH. You, as Citadel or Millennium or one of these other traditional funds that wants access to Bitcoin, can go invest at a 450 valuation, at a 10% discount, and then it goes public or through a reverse takeover. It basically means there's a shell company that the private company buys and like takes control over and then goes public goes public that way. That company now trades in 900 mil because people are paying $2 for every crypto they have on your balance sheet right now. And so that's kind of, there's like a game that's happening here. There's a game of insiders that are getting into these deals early, trying to flip aggressively to retail. And in many ways, it's way worse and like kind of more gross than the ICO model, because most of these companies are not generating any revenue at all. Zero revenue. The only thing that they're doing is that they're issuing debt to go buy crypto. And obviously that debt's callable at some point. So if they're not generating any revenue and Bitcoin starts to go down, and in 2 years their debt starts to get called, most of these, and there are a few crypto firms out there that are kind of like taking advantage of this in a big way by structuring these really horribly done vehicles that allow you to be forced into selling your Bitcoin when your debt comes due. We're going to see billions and billions and billions of selling from these companies if Bitcoin goes down too much. So there's like the market is now very fragile again, in my personal opinion, because of these guys. A year ago, the market was not super fragile. If some of you might remember Genesis, the big OTC desk that blew up because of the GBTC trade, and then had to like sell all of their other shit to try to cover a hole. And it was just like, then it just exposed this nonsense mishmash of leverage. People were levering up against completely illiquid tokens. Like something would be locked for a year and they would lever up 90% of the value of that locked thing. And it was just like this disgusting mismatch. And it turned out that we were all standing on a house of cards. We're not standing on a house of cards. That's not what I'm saying. I think the market is a lot healthier today than it was in 2021. But if we let these guys get too big without bopping them on the head and saying, stop what you're fucking doing, we might end up on a house of cards situation again. Like you can imagine $50 billion of Bitcoin gets absorbed by companies that can get called on their debt, and then it goes down 30%, and then you have to sell all of that Bitcoin all at once. That's not a good situation. So basically, a lot of these companies kind of suck. Now, one other reason why they suck, before I go on to the good, is that most of the lockups on these things, and this is me, I'm technically an insider. I have not invested in any Treasury deals up until the ones I'm about to talk about, because they're differentiated because they actually produce revenue and they're not even really a Treasury deal. But I basically stayed away from this game. Like, I'm like, this is kind of gross. It reminds me of ICOs. One reason that it's gross is because there are 3-month lockups on these shares. 3 months. That's it. If you invested in a fucking ICO, you had a year-long lockup. You invest in a Treasury company, you get a 3-month lockup. That's crazy. Like, retail is going to get there are some companies that are structured much better than others, and this is where the silver lining. MicroStrategy is now too big, and their debt is very well structured, and it's going to be very easy for them to raise money. Their revenue stream, they invented out of thin air. Their revenue stream is creating financial products. Like, that's the revenue stream now. Like, they're selling this stretch thing 9-10%, and then they go buy like a savings account, and they're buying Bitcoin with your saved money. You're paying 9-10%, and like, man, people want it, Jonah. People want that. And who?
Wow. Okay. So I have so many questions.
I'm sorry. This is but yeah, sorry. Some questions, please.
Yeah. So yeah, kind of. It sounds like there are two types of companies, Treasury companies. Type 1, they have actual revenue from doing some kind of trad business that's legitimate, and they use that revenue to finance leveraged Bitcoin purchases. That's type 1. Type 2 companies have really nothing going on. They're just basically vehicles that allow random pod shops that can't buy IBIT to buy Bitcoin or ETH or Hyperliquid or something, basically by saying, all right, just invest in our Treasury company, and our Treasury company will use your money to buy either like we'll lever it up and buy Bitcoin, or we won't lever it up and we'll just buy Bitcoin with it. So there's kind of like, is that correct? There's like real companies and shelf corporations that do this. Is that about right?
Kind of, except that there are no real companies right now.
Okay, so basically, MicroStrategy was kind of like a type 1 company. Like it had a small software business that probably
But
covered the
now the
interest
small
payments.
software business is like not anywhere
Dwarfed.
Like it's like their product is now selling Bitcoin financial products. Like that's their cash flow.
But even that product doesn't even come close to covering the interest payments on the tens of billions of dollars of debt.
They keep coming up with new forms of product, right? Like that's their genius, is that they go, okay, we've sold so much of this convertible debt shit. What if we come up with a savings account and get money through this savings account model? And everyone's like, hell yeah, I'll pour in money to this savings account that is backed by Bitcoin at 9-10%. Like they're just really fucking good. The way that I think about it is there are so many structured products in the world of finance around every asset that you could ever possibly think of. And there are a lot of investment banks that make a lot of money from selling structured products to people to fit their investment profile. You look at the S&P, how many different ways can you structure a buy of the S&P? There are actually infinite in the world of structured products and banks. And that's not even their main money maker. There's, it's all for edge situations and other types of assets. And the world of finance gets very complicated very quickly. Now, Bitcoin, it's very nascent, and MicroStrat in the world of finance, in the world of high finance on Wall Street, Bitcoin is now like the structured products revolution is being led by MicroStrategy. And if they offer enough different types of product and they do it in the right way so that the debt on most of these products is not callable and people are buying it because it's been working, it's like it would take a 2021 to nuke these people. It would take a 50 to 70% drawdown in Bitcoin for an extended period of time, which, by the way, MicroStrategy has already gone through, just FYI. It would take an implosion to bring down MicroStrategy. It would take a prick to bring down a lot of these other treasure companies.
Handling large digital asset trades requires precision. Kraken OTC gives high net worth individuals and institutions access to deep liquidity and competitive execution for crypto orders over $50,000 with minimal market impact and around-the-clock support. Trade via chat or RFQ at kraken.com/blockworks. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Well, a lot of pricks can cascade into an explosion. So that's why I kind of want to keep pulling this thread. I just want to ask one more question. For listeners who don't know what you mean when you talk about like debt being callable, humbly and respectfully, I don't either, because to me, like I traded bonds for a long time. A callable bond is a bond that the issuer of the bond, let's say that, Caterpillar, the company that makes tractors, issues a callable bond. If the price of the bond gets too high above par, like let's say that it trades up to $120, for the bond, that Caterpillar can call it, like basically buy it back at what's called a call price, which is something, maybe 101, 102, 105. So it basically is a way for Caterpillar to take their debt off the market by recalling their bonds. I don't think that's the type of debt that you're referring to here, though, is it? Right? Like this is when you're talking about debt getting called. Can you tell me what you mean exactly?
Sure. What I'm talking about specifically is that it's a type of instrument that is issued that can be redeemed before the actual maturity date. And I just read from Investopedia, but let me explain that to you in clear words. Basically, if a lot of these other treasury companies have an issue where their debt is based on some parameters, they have to pay it back immediately. So if Bitcoin goes down 30% or something like that, the way the investors would not put money into the treasury company that was issuing this debt unless there were some parameters like, okay, if Bitcoin goes down 30%, you have to pay it back before it goes down 50%, and then you can't pay it back.
So the debt has covenants. Interesting.
So yeah, it has covenants. The MicroStrategy, as far as I understand it, they don't really have any strong covenants like that at all.
Okay, now I understand.
Bitcoin can go down 99.9%, and they would have until the maturity date to pay back.
So basically, this is all gonna, now this comes to my final question for you, Avi. Okay, so it sounds like there are no legitimate companies that are covering their interest payments with trad cash flows. It's all a bit of a big pile of structured products. So now we have to ask ourselves, how does this unwind and when? To me, it seems like the market is short gamma, meaning that the higher Bitcoin goes, the more these companies have to buy because there's going to be some sort of, the mania continues. The lower Bitcoin goes, the more these little pinpricks start to add up and you start to get a cascade of selling. So we're probably not, the headline here is we're not going to stabilize at $118,000 a token. We are either gassing higher or we are nuking lower. I tend to think the former. I think the mania continues for a while for a variety of reasons.
I think the mania, well, the thing is, like, I'm ringing the, this is the equivalent of me calling for World War II in 1937. I mean, it's like, yeah, probably is going to happen if the world keeps heading this direction. But right now we're pretty far away from it because, again, in aggregate, you have these vehicles that have, outside of MicroStrategy, $20 to $25 billion of stuff that they can sell. And you just saw that $8 to $9 billion Bitcoin was sold without any issue. Now, if you take away the buy side pressure, yeah, maybe the $8 to $9 billion would have caused more of a cascade. But in aggregate, forced liquidation of $20 billion right now, it's not going to be the end of the world. Maybe it sends Bitcoin down 10, 15%. Issue comes if it gets too big. Because if, let's say, we get to 50 billion or 75 billion, and then you have 75 billion of Bitcoin liquidated in a small period of time, that's going to obviously cause a huge issue. But more than just causing the huge issue with price in time is if you eviscerate, let's say you eviscerate 10 billion of the $20 billion. That's okay. That's pretty bad. You've lost $10 billion, but the world is a big place. If you lose $60 billion, much harder to get recapitalized, right?
Yeah.
It chills the market a lot more than that losing that 10 billion does. So basically there's like the bigger they are, the harder they fall kind of thing going on here, where right now we're not in a house of cards. I'm not saying that we're gonna explode. I'm saying the market needs to change. If this gets too big, I'm going to be very nervous. Like, if Bitcoin is imagine Bitcoin's at 200 mil or 200K, and the treasury companies have 100 bill of Bitcoin. Are you happy with that scenario? I'm probably happy with it.
I have a different metric, and this is what I wanted to run by you. I think premium to NAV is the only thing that matters, right? Like, I could see treasury companies having 100 bill worth of Bitcoin at 200K Bitcoin and it not being a problem if the discount or the premium to NAV is still enormous, because that means that there are much larger pools of capital out there, presumably retail, or maybe it's these pod shops. I have no idea who's paying 2x NAV for this crap, but like, as long as that bid is there, we're good. So I feel like if we had a dashboard that could track premium to NAV across like a variety of salient treasury companies, that's probably
we can probably maybe we can try to set that up with the 1000x terminal.
Yeah, that would be a good one to add into the 1000x terminal, which we expect to ship this week or next. It's been a long journey.
Wow,
but
what a nice little shill right there, Jonah.
Nice little shill.
But what I'm saying is we're kind of in agreement in that I'm not making a call for when the treasury game is going to collapse. I'm making a call about how, like, where are we relative to the risk to Bitcoin? It's like the overall risk to Bitcoin.
Yeah, I
It's
see what you mean.
very possible that maybe I'm totally wrong, and the treasury companies stop getting any Bitcoin, and their premium to that flips negative here, and then they all just fucking implode over the next 3 months. I just don't care. They're not that big at this point.
That's true.
You,
But when they get big, one thing that we can be sure of, and this goes back to our earlier conversation about Galaxy's OTC deal, these guys, when they have to liquidate, they're not going to liquidate gradually over 15 days by hiring an execution trader to like manage the participation rate. They're going to slam bids. Oh, it is going to be a feeding frenzy for OTC desks if and when these guys eventually need to liquidate all at the same time. Because when these companies need to liquidate to pay off some sort of bond that's been basically recalled from them, like they don't have a month. They've got probably T+5 or something inside of that. So there's going to be a lot of forced, rapid, sloppy liquidations of, and a real amazing P&L opportunity for the OTC desks out there who can just throw terrible bids onto those trades and get hit by panicked, forced sellers. I agree with you that it doesn't happen yet, right?
well, here's something interesting. So there's clearly some real appetite for Bitcoin from wherever you want, for these treasury companies, from both the pod shops, from retail, and from people that just want exposure to Bitcoin, maybe not in the direct way. It's possible that there are people out there that view these treasury companies, however misguided they are, as less risky than Bitcoin because they're technically acquiring Bitcoin over time. So they're like reducing their cost basis. I've heard that being said. It's not really true because your shares get diluted. But besides the point.
Wow. Wouldn't be the first inaccurate Wall Street shill.
Right, because just again, if you don't know this, they raise debt normally through convertible bonds, which at a certain strike price are convertible to equity, which means that they issue new equity when that debt hits a certain price, which means that you, the shareholder, get diluted.
Yeah.
So it's not necessarily like you're not really accumulating Bitcoin per share all the time. MicroStrategy has pulled that off, though.
Pays to be first.
Yes, pays to be first. Again, MicroStrategy is a little bit of a different beast. They, by all accounts, have done a great job. Now, what we are seeing, which I'm personally kind of excited about, is that you're seeing some more serious people step in. So there's a raise going on right now for a PE firm. Like imagine Berkshire Hathaway, but Berkshire Hathaway, instead of holding cash, it held Bitcoin. Like that's kind of the way that they're pitching it. Is we're going to go run a PE shop, but invest our proceeds, like all the cash flow that we get from these companies, instead of holding our balance sheet in cash, we'll hold it in a mix of Bitcoin and S&P. And like, I actually think that's kind of a more interesting way of getting access to this idea. Is you have real companies producing real revenues, actually just allocating capital to Bitcoin. It's basically a way of backdooring corporate purchases of Bitcoin. It's like the Bitcoin world has said for a long time, hey, corporations, it would be really smart if you put some amount of your balance sheet in Bitcoin. You guys should all probably do this. And then basically only Tesla pulled through on it. Now people are saying, well, we can raise enough money to go buy companies and make them put Bitcoin on their balance sheet.
Yeah.
And then you have at least a real company that is facilitating the buys of Bitcoin.
Yeah, I mean, it's sort of what everybody expected to happen back when Tesla did their big Bitcoin treasury purchase. And I think it was 2021. It was like, all right, corporate America and maybe corporates globally are going to shift from holding fiat to holding Bitcoin. And Bitcoin's the new alternative reserve currency. Didn't quite happen then, but it totally should happen in the future. Like here in Los Angeles, you want to hire a plumber, like they're going to throw out crazy numbers, 150 an hour, right? Like it feels like the dollar is turning into funny money. So I do sort of understand why a lot of corporate treasurers wouldn't want to hold dollars at this point, or even T-bills. They'd want to hold something that seems to be supplanting the dollar. Maybe they want to hold S&Ps. Maybe they want to hold Bitcoin. Frankly, holding S&Ps or Bitcoin feels a lot less risky than holding dollars to me at this point. Until, of course, as I've said 1,000 times, until a redistributionist gets elected to go ahead and nuke assets and pump the dollar. So quickly, though, like, before we get into macro stuff, we've talked a lot about Bitcoin. I wanted to quickly ask you about ETH. My thinking is that there's a lot of victory lapping going on in the ETH, the beleaguered ETH community, because it's, obviously the price has doubled or more than doubled from the lows. But what I think, like my take before I pass it over to you, is I think these guys who are happy about this price action in ETH kind of look like clowns. And the reason why is, no one who listens to this podcast has been debating between holding ETH and holding US dollars. Like, you're just debating between holding ETH and holding some other crypto token, whether it be Bitcoin or altcoins. So if you look at the ETH BTC chart, the thing has gone down in a straight line for, basically since 2020, since December of 2021. It peaked at 0.09 and it sold off all the way to 0.018 or 017. And now it's like bounced off of those lows. So we're still down 80% from the peak. And everybody's like, look, I'm so happy. ETH is so great. And what I think is like, actually, if you're thinking that way, you're literally just revealing that you held ETH all the way down, got absolutely daddied on it, and you're just happy that the sell-off stopped and you've still underperformed Bitcoin massively, which is a more obvious trade. So to me, like,
I've got a
has ETH
slightly more
BTC
nuanced
bottomed,
view
basically,
than
is the
that.
question here, or is this going to keep going?
Well, here's what I'll say. I think some criticism is fair in the sense that like ETH popped off the lows. It had that like 30, it was like a 30% candle in a week, and then it went sideways for a bit, and everyone was like, ETH is still fucked, ETH is still fucked, ETH is still fucked, and then ETH proceeded to pull another 30% move higher. And so people are like, they're seeing that number, and to be completely fair, it's like, yeah, like better to catch that turn. Like I would have much rather pivoted my Bitcoin to ETH and then held that ETH until now than maybe sold it back out. I didn't really take that trade, as you guys are aware.
Nobody picks the lows, though. That's my point.
But I guess the other thing that is happening is that ETH just became so undervalued relative to historic price. If you look at it versus Bitcoin, I mean, it went to levels that we hadn't seen since 2019 versus Bitcoin. And I think what happened is that Wall Street just picked up on that, and they were like sniffing around, kind of in the same way that Wall Street loved Ripple. Is that Wall Street was like, well, if Ripple can go to, like the not Wall Street, I'm maybe 22 to 27-year-old finance pros more accurate than just saying Wall Street. But yeah, so that group of people was like, oh wow, like maybe Ripple will be able to hit $600 because then it'll be at par with BTC. And I think a little bit of that mentality is what's happening with ETH combined with the Treasury vehicles, right? ETH is the second largest asset, right? Which means that it has a lot of supporters. It has a lot of people that own a lot of it. And it does have a story, however true or fake that story is. And so it kind of outperformed because there was a gap in the market. And the gap in the market is Bitcoin's feeling overpacked right now. Where else can I go to generate outsized returns? That's what I'm hearing from even people on, like even more TradFi people is like, yeah, okay, Bitcoin doubles 200,000, like 250,000, 2.5, like whatever. Like what can I get that'll 5 to 10x in crypto? And people are looking at ETH, and that's a role that it can fill. I mean, it's the catch-up play. And my previous thinking was there's not going to be a significant catch-up play because ETH is kind of like it's kind of done. Like it doesn't really have anything going for it anymore. And Wall Street's going to sniff that out, and the traditional guys are going to sniff that out, and the people that own Bitcoin ETFs are going to sniff that out, and then they're just not going to allocate because this is in theory smarter money. And I think that what's turning out to be true is that they're not that afraid of buying ETH. They're not that afraid of going down the risk curve, and that's actually where they like that's where they can go down the risk curve.
Yeah.
Is ETH. They can't really go down the risk curve anywhere else because they're stuck in their brokerage accounts.
So basically, I think Chris, I think it's pronounced Bernisky, tweeted that bullish price action is the best content marketing there is.
It's true.
And it's so true. So like ETH, the only reason why I think I could construct a bull case for ETH is that we just broke a downtrend. And we're like, this rally is real now. It's not just a dead cat bounce to be faded. I was wrong. I thought it was a dead cat bounce to be faded. I wasn't wrong for like a huge amount of money, but I was wrong. It rallied another 30% from the first 30% rally. And basically like I'm questioning whether or not this rally can continue. I don't care that much because I'm so like, I'm still so bullish Bitcoin. I can't see straight. And I think it's a smarter idea to buy Bitcoin with leverage than it is to buy ETH. Mm-hmm. But just before I totally like put the final nail in the coffin on ETH for the next month or two, like just asking myself, is it worth a trade? Should I own some ETH right now? Avi, do you actually think ETH can 5 to 10x if Bitcoin 2x's? Like, I don't. I think that would be insane. But do you?
I think so.
Do people?
I think ETH could. Here's the thing especially with these treasury companies that are now like the buyer of ETH. I do think that ETH could double from here. I'm not calling for that. I think that ETH will probably continue to outperform Bitcoin until the treasury company stuff unwinds, because it's right now like the treasury is a much smaller part of the Ethereum ecosystem, but the dollar value that is willing to go into these things are basically, I think, will be equal at some point. And so I think ETH can attract a larger percentage of those flows. So I do think that based on market structure, ETH is looking pretty good. I think based on long-term 5 to 10 year prospects, ETH is still exactly where it was when I said that it was a piece of shit.
It really is the XRP of this cycle, isn't it? It's trading just like XRP. Like you can't write it off, but it's still a dino coin, you know? It's like the dino coin that doesn't go away.
Who knows? Maybe it'll turn it around. Maybe they'll turn it themselves around. I don't know. I have like what maybe somebody will show me what they're doing to fix themselves, because I'm not seeing anything yet.
I mean, but I don't hate. Let me just qualify.
It's just price action, Jonah. Like you understand, like it's just price action that's making people excited.
Yeah, it's like trading a meme. I mean, like don't get me wrong. I do a lot on Base. I think Base is great. It's I find that a lot of my on-chain activity and on-chain like fiddling is on Base. But to me, Base just feels like it's basically the Amazon Web Services of crypto. It's just like Coinbase's ledger that's centralized and like pretends to be a part of ETH. So I struggle to get bullish like the expensive block space mainnet and its associated asset on the basis of institutions coming into the space or some sort of like fundamental story, because realistically, like Kyle Samani said it best: the future of ETH is Base. So I don't know what that means for ETH fundamentals, but ETH technicals look incredible right now. We just broke a 4-year downtrend, and the timeline's excited about it.
The technicals look better than I could have hoped for. I mean, these are fucking phenomenal technicals. It's just like I think all of our ETH like to diagnose a mistake with us, and what at least a mistake with me is that I was so focused on the fact that ETH was not it's like still a trash platform. It wasn't generating any meaningful usage. It wasn't generating anything particularly exciting on the project side. It basically was like a hub for stablecoins, and that's it. And continues to be. I overlooked like how fucking good the technicals became.
Yeah. The thing is, though, like I think writing off ETH after the first bounce, you do not have to self-flagellate for missing good technicals. Like that 30% bounce was like countless other 30% bounces on the ETH BTC chart that would have been phenomenal sales over the past 4 years. It's now we've got the second 30% bounce. Now the technicals are good for the first time. So I think I don't think you need to worry about having missed the second 30% bounce. It's just more like, okay, are we about to miss 100% rally from here in the ETH BTC chart? Now the technicals are good, whereas before they weren't. And the fundamentals are still like trash. So I'm not a very good technical trader, never have been. I'm probably going to stay away because I don't believe in like going in big on things that I don't consider to be my edge or my core competency. Like I consider myself to be more of a fundamental trader, more of a macro trader. And if a chart looks good, like I'm not good at assessing that. You're better than me at that. So maybe this is a better opportunity for traders out there who are more like Avi, for traders who are more like macro narrative thinkers who don't understand technicals like me. I think it's okay to be sidelined. That's sort of my like. I will feel happy for ETH bag holders and understand why they put on the trade if they do, but I just can't get my head around it. And the reason why it's bad to put on a trade that you can't get your head around, even if you feel confident in it, is that if you start losing money, you have no framework to cling to. You just sell on the lows like a jackass. So that's why I don't like doing those things.
Fair enough. I think that's a good place to end. Don't be a fucking jackass.
Yeah. Don't quit. Like lightning round before we end. I have a bunch of questions for you because we missed you last week. If this is the rotation into ETH, are we getting an altcoin season next?
Oh yeah, 100%.
All alts or just quality?
I think. I mean, we already had a little bit of a mini alt run. I do think that we need Bitcoin to take another leg before we get like a serious alt run, but I am pretty bullish on some alts here. Just like even the dog shit ones, I think could do well. Like I would wait a little bit. I think we need some of them to come off because we just had like a little bump. But I do think that we'll see another little run here, especially if ETH continues. Although one thing that I will say is that Hyperliquid has underperformed a lot over the last month or so, even, and I think it's probably a buy again.
Okay. Well, next question.
Buy again because I never sold any, but like I'm gonna buy more.
Yeah, I was thinking of doing something similar there. Good fundamentals. Next question. Macro. What are the factors that make you the most bullish right now? Any macro catalysts that excite you? For me, it's just rate cuts.
Yeah, it's just the fact that Powell's gonna get steamrolled by Trump.
Yeah, rate cuts, and I think AI deflation is going to boost risk assets across the board. Okay, risk factors. Is there anything that's like you said earlier, a big sell-off could trigger Treasury company selling. Are there any big like exogenous non-crypto risk factors that could tank this thing on your radar?
I don't see anything. We've navigated the tariff issue very well. The only thing that I could possibly see was a headline that came out today, which was Trump gave Putin an ultimatum to end the war in Ukraine in 2 weeks. And it's like, well, what does that mean? I mean, like in 90% of cases, it means nothing and we're good. But if he means we're going to start like sending over F-35s and like, I mean, that would be pretty bad. I think Russia would probably see some cyber attacks in the US in that case.
Yeah. Okay, so
I put that pretty low. Like that's a pretty low on my probability, but it was something that I was like thinking about today. I was like, I don't really like the idea of playing hardball with Russia here.
Yeah, no, that was the purpose of my question, to sort of like tease out a crazy thing that's not on anybody's radar, like a known unknown. Like, yeah, I guess the Mike Tyson line, everybody has a plan until they get punched in the face. It's sort of like every Bitcoin hodler has a plan until a tactical nuke hits Zaporizhzhia or whatever that region is called, right? Then it's like, oh no, what do I do now? We'll have to do an emergency podcast if that happens. But yeah, I just wanted to like table that for the end of the call. Anyway, dude, great talking to you. Thanks for making time.
Yeah, this is awesome as always. We'll catch up again soon.
For sure. See you next week.
Adios. Bye.
Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.